Good morning, one and all. I should say great morning, should I? Because it really is. Welcome to the show. This is NYSE TV Live. I'm your host today, JD Durkin, here at the New York Stock Exchange. Stocks are slightly higher entering today's trading session after a mixed session on Wednesday resulted in the end of the Dow Jones's 4-day win streak. All good things, of course, must come to an end. Investors receiving weaker than expected jobs data yesterday. The private sector adding only 37,000 positions for the month of May compared to economists' expectations of 110. Traders will get more insight, of course, into the state of the U.S. labor market tomorrow when the Bureau of Labor Statistics releases the anticipated May jobs report. We're all looking for that one to cross the wire. This week's jobs data could dictate FOMC policy. The central bank delivers its next decision on interest rates on June 18th. Meanwhile, we got one company in particular. It is generating a lot of buzz here at the New York Stock Exchange today. That is CRCL, the global fintech company. It's building a new internet financial system and working to change the way money moves. It's listing right here at the NYSE under ticker symbol CRCL. Last night, the company announced its upsized IPO, now raising more than $1 billion. And in less than 30 minutes time from right now, CRCL will ring the opening bell to celebrate this milestone moment. The company will also ring the closing bell this afternoon as well from its New York City headquarters. CRCL's stablecoin products provide near instant, more secure, more transparent payments using blockchain technology. The company, of course, is widely known for being the sole issuer of the USDC stablecoin. It's the world's second largest stablecoin by market cap at approximately $61 billion. We will be covering the IPO throughout this morning's program, including lots of live footage of CRCL executives signing the Distinguished Guest Book. We always love when that happens, and everything taking place on the trading floor. There is so much on tap today. Let's jump in head first right into the action. Off the diving board, shall we? Joining me now is a good friend of ours, Jay Woods, Global Strategist at Freedom Capital Markets, the one and only, my man. Win this market kind of broad strokes. Yeah. What does this mean to have a company? Welcome back to the broadcast, one and all. We do, in fact, love live TV. Technical difficulties and everything. Jay, what went to break?
Where did we leave off?
Broader IPO.
At ICE, we aim to solve some of the biggest problems in markets. Often these issues come down to a lack of transparency because a market doesn't have the right technology, data, or systems. We address this by digitizing analog markets. Digitizing markets brings transparency. At the heart of this is our technology. It's the same technology which underpins our trading venues, that powers the New York Stock Exchange, that drives our fixed income pricing, and our mortgage platform. Deep trust in our markets has made us the world's largest exchange for energy trading. Our exchanges price the world's most important commodities, many of which support the shift to lower carbon fuels. In mortgages, we operate across the life of a loan, Through electronification, we're making the home buying process faster and simpler. And through our data, we're bringing new transparency to mortgage securities. We're bringing you powerful, fast technology, access to a depth of market data. We're building liquid markets across asset classes and geographies. And we're listening to our customers every day about what you need.
We're so back. That's what the kids say. Technical difficulties, of course, we do apologize, but thank you, of course, one and all, for watching NYSE TV. I am JD, still here with Jay Woods. Jay, we were talking, of course, about Circle's IPO.
Yeah.
What does this mean for you in this moment? What are you following as a longtime market maker yourself?
Well, when IPOs come to the market, that's a good sign that things are moving along, and we are only, 2.5%, 3% away from an all-time high. This market has been climbing a wall of worry. If you read the headlines, you would be shocked to see that with all this tariff talk, we are now on the verge of 6,000 in the S&P 500, and then soon all-time highs. I don't know if we're going to get there, but when you see a big IPO and a lot of hype for this one, it means retail's hungry for something, and I'm glad we have something to offer them here at the New York Stock Exchange today.
Given your longtime experience as a DMM, talk to me about how price discovery works, especially for a day like today. We get this range, the buy, right? I think you've called it a sandbox before. You kind of get in there, and it takes a while for that first trade to clear.
It's fun, it's stressful, it's exhilarating, it's a lot of things. I'm bold for a reason because I've done a few of those. But no, it's the company's day. It's about them going public and passing the baton to their market maker, to the New York Stock Exchange, to represent them and let the stock exchange people stress over how it's going to go from here. But yeah, this is a day we take our time. We try to get it right. So people know that it's already priced out of the range. Okay, that's good, strong demand. The retail demand seems to gonna push this price a little higher. How high, that will be determined as we go through the process. There will be price indications, price discoveries, and a crowd of humans using their judgment to get it together. And that's why that human judgment is so vital here at the New York Stock Exchange. Have that one market maker and the brokers come in. Could there be some yelling and screaming? Yeah, perhaps. If I was in there would be. But I'm here with you, and I get to talk about the market now. So having an IPO, 3% from the all-time high, this could be a good sign of things to come. We sure hope it is.
Yeah, I want to ask you about the broader market because we did have a pretty notable gap up back on May 12th. But what's interesting, we've been in this really tight range for the S&P between about 57.70 on the downside to 59.90. It's within 3% for 17 consecutive trading sessions. Is it a skittish market? Is it a wait-and-see market? What's going on as of late?
It's a little of all of those things. But the good news is we're making higher lows. So it's constructive base building, as I like to see. We had a huge sell-off, tariff concerns, uncertainty, still there. But we keep walking it back. Now we're getting closer to deadlines. We're supposed to have 90 deals in 90 days. I think we have one wonky one with England, but the market doesn't seem to care. The market believes that this too will pass, and it's on the precipice of new highs. Will we get there? What will that catalyst be? Well, we'll see. Technology's coming back in a strong way. The semiconductors are looking strong. NVIDIA didn't take us there, but Broadcom's after the bell today. I'm watching that one closely. Price action's telling us good things are on the horizon. We'll see how they guide. But, this sideways action is constructive. Sideways is a direction. We talk about this a lot. And if we can break up, then not only will we hit new highs at the end of this year, I think we'll be very happy with the direction of this market.
Yeah, we've been back above the 50-day as well as 200-day moving average. Let me ask you a bit of macro talk because we do get the crucial jobs report tomorrow. Talk to me about considerations, Jay, that you think Jay Powell and his colleagues at the FOMC, they always say they're data dependent.
Yeah.
Got a few more variables in the mix these days given tariff uncertainty and, of course, pressure from the commander-in-chief directly onto the chairman of the Federal Reserve?
I think that pressure's the least of their concerns. Jay Powell is just gonna, he has pivoted from one data point at a time to concerns and uncertainty about the tariff situation. This is what we want to hear from them. They go quiet after tomorrow. So this is the last big piece of data. ADP numbers, jobs not increasing like we wanted to. Continuing claims, people staying out of work longer. So on the labor front, there are concerns. These are concerns that could cause them to cut. Inflationary data has been positive. It's been stable. It's not getting to their 2% mandate, but they have enough data to justify a cut. It's that uncertainty talk that we continue to hear that has put them on hold. Trump got in his ear, said, listen, we want you to cut. The ECB cut again today. So there is room to cut. What will the market will do with the 25 basis point cut? Probably baked in at this point, but it's going to be interesting to see that number tomorrow. Any shock to the upside, and then the cut at the next meeting will grow louder. I think there's still one meeting away. We'll wait till the end of July, then take August off. So it's going to be interesting when that jobs number comes out, and if any comments from the Fed come out tomorrow, because the next week up until that Fed meeting, it's quiet.
Yeah, we'll see if there's a bit of a narrative shift. Jay, thank you for staying with us through our technical difficulties. You are a total professional here in our community. The great Jay Woods, my good friend, Chief Global Strategist at Freedom Capital Markets. My man, thank you so much.
You got it.
Folks, coming up, New York Tech Week is in full swing here in NYC. The event's presenting sponsor, Andreessen Horowitz, tells us what's been dominating the conversation. That much more coming up next here on the show.
Launch team is ready to proceed at this time.
You have permission to launch.
FPU is go. LRD is go. SRO is go. CDR is go.
Ignition sequence start. Engines on.
9, 8, 7, 6, 5, 4, 3, 2, 1.
Liftoff. We have liftoff.
Hosting this event is a tremendous honor for us at the New York Stock Exchange. We like to remind people that our nation and our markets grew up side by side.
Lynn, thanks to you and the Stock Exchange for permitting us all to gather. It's so good to be back here.
But tonight, it's not just another elegant dinner among distinguished peers. It is a turning point in the history of the Medal of Honor.
We're honored to be in the presence of nearly 20 of our nation's 61 living Medal of Honor recipients.
This evening marks a renewal, a reaffirmation of our mission, and a call to action for all of us who are entrusted with carrying this legacy forward.
Because of people like you, we are able to do what we do every day, to turn that dream into a reality.
Welcome back to the show. This is NYSE TV Live. New York Tech Week, presented by Andreessen Horowitz, has brought the sector's top founders, funds, and companies right here to the Big Apple. David Haber, general partner for Andreessen Horowitz, who took part in a panel yesterday called FinTech and AI, Shaping the Future of Finance, joins me here in the studio. It is great to have you. Congratulations on everything, man.
Thank you so much for having us.
You guys are absolutely cooking. Let's start with New York Tech Week.
Yes.
What should people know about it, David, if they kind of hear about it, maybe a bit otherwise unfamiliar? And how did yesterday go from your end?
It's been amazing. This is our third annual New York Tech Week. We have over 1,000 events across the city. Participants from large incumbent institutions like HSBC and Fenwick and West, who are great supporters of ours, to small startups and venture funds across the city, and it's been really fun to see the whole tech ecosystem come out and support.
It sounds like there's just terrific momentum in general at the intersection of tech and fintech in general. Totally. What do you see kind of driving a lot of that momentum as of late, especially when, hey, we've got a macroeconomic backdrop, as you know, uncertainty is kind of the name of the game here in 2025, but you've got a lot of momentum on your side.
It's true. You know, I always say opportunities live between fields of expertise, and it's sort of an investment philosophy. I think it's also a metaphor for New York City. Right? Technology has sort of this tendency to cut across industries, and I think companies that are uniquely New York are those that live at the intersections of technology and, you know, some of the large incumbent industries here in the city, obviously financial services being the biggest one. I think the other kind of big driver of momentum right now is obviously AI, right? We're at the beginning of this massive product cycle where the software can actually do the work, right? And financial services is one of the most human capital intensive industries, right? Lots of folks sitting in Excel, you know, relatively highly paid, and there's a ton of opportunity to make, you know, those firms and those individuals a lot more efficient.
You know, it's amazing when you talk about tech. I think a lot of people think of Silicon Valley, they think of the Bay Area, maybe Austin, and people kind of forget. It's like, hold on here, Big Apple, New York City. How do you kind of see New York City itself as sort of a character or as a really crucial part of the overall backdrop to the conversation that you're focused on?
You know, it's grown a ton. Yeah, I moved here in 2009 in the wake of the financial crisis, and you know, technology has always been the kind of cute little stepchild in some ways to, you know, these other large industries. But you know, the ecosystem has probably grown 50x, you know, in the past, you know, probably 15 plus years. You know, I joined Andreessen Horowitz about 4 years ago to help open our New York office. Most people don't know this. We now have 100 full-time employees in New York City, so we are all in on New York. You know, and that's really driven by the amazing, you know, talent and entrepreneurs that we're seeing in the city every day, across industries, right? Tons of fintech companies, but also in healthcare and crypto. Obviously, you know, Circle going public today is a big and exciting moment for that industry. So yeah, we're pumped to be here, and we're expanding.
Yeah, we've moved from a wave of infrastructure building really to this surge in artificial intelligence app. Talk to me about the market signals or product motions that you're most closely tracking right now.
Yeah, we've seen, you know, an interesting, I would say, pendulum shift, you know, really in the past like 6-8 months, right? I would say 18 months ago, you probably, you know, interviewed folks that were talking about GPT wrappers. It was sort of a pejorative, you know, for AI applications, and a lot of the hype and momentum was at the infrastructure layer. I think what we've seen is, you know, massive price deflation, right? Really the cost of intelligence declining asymptotically towards zero. The ability for entrepreneurs to route workflow across models. All of these changes are actually to the benefit of the application layer. And so it's really an exciting moment for us. We're seeing tons of opportunities in AI across lots of different industries. You know, financial services obviously being a big and important one. But again, the idea that software can actually do the work is making markets so much more interesting that were never candidly that interesting to sell software into, in large part because labor budgets, you know, are 100 times the size of software budgets. So if you can actually tap into the labor budget as opposed to just IT spend, the TAM and the ACVs that these companies are seeing are bigger than we've ever seen.
There's so much competition out there. What makes for a real moat in the market? Actually, I'm gonna have you hold for 1 second, David, because we do have a look here. These are the Circle executives there with Lynn Martin, NYSE president. They are signing the distinguished guest book right underneath the bell. Please hold on 1 second. We'll get right back with you here. This is a ceremonial ledger. It is reserved for some of our most notable visitors here at the New York Stock Exchange, individuals who have made really significant contributions across finance, entrepreneurship, business, government as well. And just in the last few years, we've had celebrities like Dwayne "The Rock" Johnson sign the distinguished guest book. We've had CEOs like Peter Jackson of Flutter, Larry Culp of GE Aerospace sign the distinguished guest book. Of course, President Donald Trump, when he was here in December on behalf of Time Magazine. You're taking a look there at the team from Circle signing that book. And we're going to bring back in David. Of course, we are about 11 minutes or so out from the opening bell. David, didn't mean to interrupt, but I wanted to get your stats. Hey, listen, this is the beauty of doing the show down here. We get a real good look at what's going on here on the floor while we engage on conversations. But I wanted to get your sense on, despite all the competition, how do you really establish a moat for yourself in a very crowded field?
Yeah, it's a good question. I would say, you know, my mental model is this notion between differentiation and defensibility, right? I think AI is an incredible tool for differentiation, right? We have a company that is doing voice agents for auto loan servicing as an example, right? The idea that a voice agent can speak in 50 languages, fully compliantly, 24/7 in 50 states, hugely differentiating from the individual. I would say that the technology alone is an ephemeral advantage, right? It's highly differentiated, not necessarily a source of defensibility. The defensibility resides in things like owning the end-to-end workflow, becoming a system of record, becoming a platform, having a network effect. And the reality is, I think these were always the heuristics that we would always evaluate when looking at software companies historically. I think they're still true today, right? Again, the key difference is that AI can actually do the work, and the TAM and the opportunity for labor, and capturing that labor budget is just so much bigger than it's ever been. But the moats, I think, are largely the same as they've always been.
Congratulations on just terrific work surrounding New York Tech Week. Thanks a lot for taking the time to visit us here at the New York Stock Exchange. That's David Haber, general partner at Andreessen Horowitz. Thanks a lot, man. It's great to have you.
Thanks so much.
Folks, Circle is in the spotlight this morning as it lists right here at the NYSE. We just saw the signing of the book, which is awesome. The company's behind, of course, the USDC stablecoin. That's the globe's second largest stablecoin by market cap. Joining me now is Matt Hogan, CIO at Bitwise Asset Management. Matt, it is great to have you. You've said we're entering a new era where Wall Street and crypto are, quote, getting married. Matt, what does that mean? All right, we're going to look to get Matt's audio up and running. That's Matt Hogan, the CIO at Bitwise Asset Management. Folks, we're going to take, we got Matt up and running. Let's bring Matt back in. Matt, hey, this is the beauty of what we do, my man. You never know what's going to happen. Matt, you hear me okay?
I can hear you. Can you hear me?
I think I'm still having a hard time, but you're good. Matt, talk to me about, as you say, getting married, crypto in the world of Wall Street. We're really seeing institutional investors really warm up to the space as of late. All right, we're going to work to get Matt's audio up. Folks, stay with us. We're going to take a quick break here on NYSE TV Live. When we get back, we're 8 minutes out from the opening bell. Don't go anywhere.
1 second, having a slight audio.
It's not just a moment, it's really a movement. And right now that future is being written by AI. We don't just ring the bell on a trading day, we hopefully ring in a new era. An era where humans are exponentially more powerful with technology than alone. That's why it's called HumanX.
3,500 professionals attending with over 300 speakers with the most influential voices in AI, business, tech, people who genuinely cared about changing the future. We're not just talking about the future here, both at the NYSE and at HumanX. We're building it.
This year alone, the companies at HumanX have raised $95 billion in capital. From predictive analytics that help investment strategies to AI-powered risk management, the companies that embrace this technology will lead the next decade of market growth, where AI isn't just another tool, it's a force multiplier. A future where those who understand its potential, for those who invest in its power, won't just adapt, they will lead. So folks, welcome to this new era. Let's go ring the bell.
Learning and development at ICE is all about empowering our employees, leveraging the amazing amount of knowledge that we have across the business.
We've put quite a bit of investment in our programs just in the last couple of years. It's exciting, frankly, at this point where we are.
What I love best about working at ICE is that it's a multinational company with people from all over the world that hold tremendous amount of knowledge and expertise in whatever it is that they do.
Yeah, I've found opportunities in this industry, in this field, to really serve people and to help people with their careers.
I love to teach. I think it's a beautiful position to be in, to share knowledge and to see people get better from what you give them. This company always keeps me on my toes because it's continuously expanding, growing into new fields in the financial landscape.
My favorite part of the job is getting to watch employees grow and develop through their careers. It gives me a great deal of satisfaction when we run a program, for example, and we get impact from people about how it's made a difference professionally, but also how it's made an impact on them personally.
ICE has established itself on its core competencies: integrity, collaboration, communication, leadership, and problem solving.
We tie a lot of our programs back to those core values and the behaviors that support those. I think learning and development really fits within the culture of ICE just by the nature of the organization.
It is up to you to be vigilant, curious, inquisitive, ask questions. That will help you succeed in your role.
Welcome back to the broadcast, one and all. This is NYSE TV Live. I'm your host today, J.D. Durkin. In just a moment, Circle is set to ring the opening bell as it celebrates its highly anticipated, and I do mean anticipated, IPO here at the New York Stock Exchange. The company's listing marks the most significant crypto IPO since 2021 and the first major IPO by a stablecoin issuer. As we just touched on there a few moments ago, talking with some of our guests throughout the broadcast, Circle is the sole issuer of the USDC stablecoin. That is the second largest stablecoin in the entire world by market cap at approximately $61 billion. The company says it's on a mission to build a new internet financial system and change the way that money moves. Circle stablecoin-based products aim to provide near instant, more secure, and more transparent payments using blockchain technology. Circle adds it's building the financial tools that will support the future economy. Circle's been making lots of headlines this spring ahead of its anticipated IPO as well. In April, the company launched CPN to connect financial institutions. That includes banks, neobanks, payment service providers, virtual asset service providers, as well as digital wallets. There's a lot of names in there, but it's all important. And ultimately to enable faster, lower cost, more transparent cross-border payments using USDC, EURC, Circle's euro-backed stablecoin, and other highly regulated stablecoin payments as well. When it comes to international growth, back in March, the company announced the full-scale launch of USDC stablecoin in Japan through a joint venture partnership with Japanese financial conglomerate SBI Holdings. Weeks later, the company received in-principle approval from the Financial Services Regulatory Authority of the UAE, and in order to operate as a money services provider. A few other things worth of note here for the company, as we are expecting this listing in just a short time. $31 a share expected to there be above the expected range, a total market value of $6.8 billion. As we've been talking about, what has really arguably put this company most on the map is that it is the sole issuer of the very popular USDC stablecoin, which accounts for more than 25% of the entire global stablecoin market by itself. The company seeks to raise $1 billion offering of 34 million shares. The primary underwriters for this IPO, JP Morgan, Citi, and Goldman. And of course, right down here on the trading floor of the NYSE, our DMM on assignment for today, also known as our designated market maker, the good folks over at Citadel. This is a company with a distinct focus on bringing dollar-denominated transactions onto the blockchain. No shortage of interest today for this IPO from longtime crypto enthusiasts and many others in the financial space as well. As we've been talking about with many of our guests, we've really seen the financial world of institutional investors increasingly warm up to the broader cryptocurrency space. Don't go anywhere, folks. We're coming right back with the opening bell by Circle coming up after this. you have it, folks. Easily one of the most exciting mornings that I've seen here at the New York Stock Exchange in quite some time. Jeremy Allaire, he's the co-founder, chairman, and CEO of Circle, just ringing the opening bell alongside Lynn Martin, of course, president of the NYSE. This trading floor, I'm having a hard time speaking because it is that packed with that much enthusiasm. Every opening bell is special. Every closing bell is special. But on a day like today, for a highly anticipated IPO, this anticipated listing, this is front and center. This is what the New York Stock Exchange is all about. And there's no one better that I get to bring in now for much needed perspective than Michael Ryan-King. He is senior market strategist for the NYSE. Competing with volume up here is not easy because they get quiet. I'm kind of bringing my voice down, and then they get really loud. So we're going to do our best during the interview. Mike, thanks for being here.
Yeah, as you said, I mean, really exciting morning here, kind of on the exchange. It's the loudest I've heard it here in quite some time. Yeah. Maybe since the president was here, actually. So
yeah, back in December. That was a cool day with Time Magazine. What does this tell you about either IPO? I don't want to say resurgence, but maybe interest, appetite, right? We had a lot of big names early this year, and they said, hey, there's a lot of market uncertainty. We don't know our exact path forward, but this is a big one at almost $7 billion.
Yeah, for sure, right? I think there was a lot of kind of optimism heading into the new year with the administration. Some of the volatility that we saw in Q1 seemed to have pushed some things out, but we've definitely started to see kind of some of the bigger IPOs starting to come to market over the last month or so. And I think really importantly, you're seeing kind of demand for those IPOs in the initial market, but you're also seeing that in the secondary market, and those IPOs are all trading well on the back end, right? So that's going to continue to move the pipeline forward.
Yeah, of course. And on a day like today, we very closely follow the first trade. We'll see what that looks like. Of course, the buy side and sell side kind of get into that sandbox and mix it up. And it's a busy day, of course, for Citadel, our friends down here for the DMM. And you know better than anyone what these days are like.
Yeah, it's going to take some time before we see that first trade as they look to kind of pair off kind of some of the buy side and the sell side. But it'll be exciting when we get there.
Yeah, I want to get your perspective on what we're expecting for tomorrow's jobs report. Of course, tomorrow's print comes 2 days after yesterday's ADP print. Big disappointment to the downside at only 37,000. How do you read an ADP print, and does it tell you much about what to expect from labor on Friday?
So I think on a month-to-month basis, right, there can be a lot of variability between the two reports. I think directionally, though, they do tend to move in the same direction. Right, this morning we also had initial jobless claims come in a little bit higher than last week, moving up to 247,000. Continuing claims continue to hold right around 1.9 million. But I think one of the things that markets told us yesterday, right, is that you had this weak jobs report, you had a weak ISM services number, but the equity market largely shrugged that off. We did see Treasury yields, rally pretty significantly, but equities kind of understand, this idea that we've been talking about. I've talked with Kristen, kind of on air, in our written reports, this idea of this time delineation of before tariffs and after tariffs, right? And we're clearly in this time period where we're kind of in purgatory. So you're seeing, we saw quite a bit of economic activity pick up, kind of before the tariff announcements. This morning we saw a very significant drop in the balance of trade, with imports falling, kind of about half from what we had seen previously. So that shows you've had this pull forward of demand, right? Which means as we kind of are in this waiting period to see what policy looks like, we're expecting to see kind of some slowdown in economic activity, right? And that's kind of where we're at. I think the ADP report from yesterday does put some downside risk into tomorrow's non-farm payrolls. So estimates are calling for 130,000 jobs to be added. That's down from 177,000 in the prior month. I think there's some downside risk to that. You get a really kind of negative report, call it sub kind of 50,000. That could kind of potentially start to change the narrative kind of around what Fed policy will look like going forward.
More broadly here, Michael, it seems as if markets right now so far today, they're kind of make up their mind. We've got the S&P in positive territory fractionally, the Dow is down fractionally, but you and I, very early this morning, we're talking about the outperformance for small caps. What have you seen out of the Russell 2000, and what should we make of its outperformance relative to the other indexes?
Yeah. So year to date, small caps have underperformed very, very significantly. What we saw yesterday and starting a little bit earlier this week is that we've started to see some of that performance gap begin to narrow. I think that's in response to some of the move lower that we're seeing in Treasury yields. Right, those companies tend to be more reliant upon capital markets. right, raising of capital, right? They don't have the self-reliant balance sheets. So if we continue to see kind of the interest rate environment, move a little bit lower here, that'll be supportive for those companies.
Yeah, by the way, and any eagle-eyed viewers who may have caught another bell just ring a moment ago, that's a different company, a different stock who just had their first bell go off. So there's a lot going on down here.
Had me a little confused for a second.
I was like, wow, that is the fastest first trade I have ever seen for an IPO open. Let me get your take, and Jay Woods and I were chatting about this today, about Jerome Powell, his colleagues at the FOMC. They want to stay data dependent. They got a lot of considerations on their plate right now.
Yeah, and look, I mean, the potential impacts of tariffs put the Federal Reserve's dual mandate at odds with itself, right? Where there's potentially, potentially inflationary in nature and potential to slow down growth. They've largely said they're in a wait and see stance until we see what some of that policy looks like. The only thing, as I sort of mentioned, just previously, the thing that would potentially change that is if we really started to see some significant deterioration, in the labor market data. And so that's why tomorrow is such an important date. We have, over the last week or so, started to pull forward some of those kind of rate cut expectations again. It's about a 1 in 3 chance of a first cut in July, 80% probability in September is where markets are, kind of before I came up here this morning.
I'm right about out of time, but any big catalyst you're looking for?
Well, so, just before I came on this morning, right, the Chinese media was suggesting that long-awaited phone call between President Trump and President Xi was occurring. So we'll wait for a readout on that throughout the remainder of the day here.
All right, we got no movement in the markets yet, but that's a good one because I've been up here preparing. I didn't even know that we had that report. So that's why we bring you in. Michael Reinking, Senior Market Strategist for the NYSE on an absolutely chaotic day in the best way possible here at the Exchange. Michael, thank you, my friend, of course, as always. Folks, coming up, Circles in the Spotlight today as it lists right here at the NYSE. Stay tuned for more coverage after this.
You are bringing the types of services that people need to the masses.
We are going to write the future of healthcare, one where care is more personalized, more accessible, and much lower cost.
You both had injuries and turned it into an amazing company.
Together, we've built a product that is automating away 95% of human clinician hours associated with physical therapy. And along the way, we've transformed outcomes, experience, and the cost structure. Each of you were hand-selected to be here today because you have been leaving a positive impact on this world. This IPO is an important moment, but it is still just the beginning of our story. And you each have a hand on this pen. Gabriel and I are so grateful to come to work with you every single day. So what do you say? Let's ring that
bell. February 14th, I rang that bell. It was just unreal. The enormity of this thing is just like hitting me. I don't know about you guys, but this is really, really exciting. Some of the best ideas when your backs are against the wall, and many in this room that have been here 15 plus years, that if you just keep your head down, whatever challenges you face in your life, it will lead to days like this. We would not be here today without every single one of you killing it every day. I can't thank you guys enough, so congratulations to all of you. I get to have all the accolades up here and I get to speak, but it's really all of you guys that have made this possible. I just happen to be the facilitator, and I'm proud to be that.
Welcome back, one and all, to NYSE TV Live on a very exciting day here from the Stock Exchange. While plenty of excitement is brewing here at the NYSE, especially given Circle's anticipated IPO, the exchange has also been making news in the Netherlands at this Money 2020 Europe event in Amsterdam. The NYSE, in collaboration with Money 2020, Cheddar, and FinTech TV, all announced a new content series called Taking Stock. Additionally, a series of NYSE-listed payment firms announced new products and partnerships at this week's event. But that's not all. In late 2024, the NYSE community took the world's oldest living bond, which turned 400, to the Netherlands to give it a proper celebration. Let's take you back to that moment.
To travel with something this old and this rare and this irreplaceable is both exciting and nerve-wracking. Nerve-wracking because if something should happen to it, you cannot get another one. Which is the greatest fear of, I think, any archivist. But exciting. You don't get to bring a document like this home that often.
When something turns 400, it's worth throwing a little celebration, and having this bond and having the connection between the New York Stock Exchange and the Netherlands that goes back 400 years is really something to mark. Think about this bond, it's basically raising money to repair a dike and build a landing space for boats to land. And the whole community would benefit from it, and increasingly with climate change to, not just combat climate, but also coincide with the changing world.
You look at something like this and you see not only people partaking in a tradition, but coming together for something bigger than themselves. I don't know that many people necessarily think when they buy a bond that they're doing something patriotic, and I don't know that people necessarily think of it that way, but I look at something like this and that's in many ways what I see.
When this bond was issued December 10th, 1624, it's written that every 6 months it's supposed to be brought back to where it was signed, which is where we are today, and presented, and then the interest is given. And so along the margins of it are all the years going back from 1625, 1626, moving on. It's really a cool experience to be part of it, and it's really cool how it is 400 years old, it is history, but it really is tying into a lot of the conversations we're having in Intercontinental Exchange today around valuing climate, valuing water management, and valuing these products that are, in some ways they're the oldest products we have, bonds, but also it's some of the most innovative stuff is happening in them. If you think about it, we're sitting in the Netherlands, a country that's had to think about water management for its entire existence. But now everywhere it does. If you think about closer to home in the United States, we are seeing water in places we haven't had water before. We're seeing water not in places we used to have water. And so this idea of what can you learn from, a 400-year history, and actually longer, the bond's 400 years old, but the underlying structure that the Netherlands used, is we can all learn from that as the idea of basically coming together collectively as a community to put together the funding, and also not only that, the infrastructure needed to combat or in some ways just redirect climate. We are in some ways looking back to also look forward, and our parent company, particularly Intercontinental Exchange, begins to look at the products we're going to need, not just to track and put data to climate change, but also create the investment products we need to either live alongside it, combat it, or even potentially reverse it.
This one is really a living document. It's not just capturing the purchase of debt from a company or a government. It's capturing that moment and then every year thereafter. So you have the text of the bond itself, of the agreement for how much is being lent, but then all around the edges, every single year that an interest payment was made, you have someone else's hand being affixed to this document. Someone coming year after year after year for, at this point, centuries to engage in the same fairly simple act, but a meaningful act, year after year. And so it's amazing that it's a living document. It's still serving the exact same function it served the day it was written. And that's, in many ways, the beauty of what we're here for, is to still partake in that same act that someone partook in 400 years ago.
The core of what that bond does, or what the markets do, hasn't changed, which is raise the capital needed to do something big and then help everyone hopefully benefit from that, either from what that builds or from investing in it. So what changes around it is obviously the technology, is the data, is the ability to connect things. We have bonds in the New York Stock Exchange that were sold in the Netherlands that were US bonds from the 1700s, but now instantaneously there's a global ability to invest in products and trade with each other and share information and share data.
That's the beauty of this document, is that you look at it and you see the physical evidence, line after line, of that promise kept by both sides for 400 years, and hopefully 400 more. It's an important document. It should get its due and get to see the world and get to come home once in a while.
The Greek name for the aspen tree is aspis. Aspen trees are the last to burn in a fire and the first to repopulate and replenish. We exist to protect and shield our customers from risk and to help them rebuild when the worst happens. Our listing today comes at a time when the role of insurance in helping businesses take risks and grow is more important than ever. Every day, the team at Aspen proudly helps our customers by bringing them clarity, values, collaboration, and doing the right thing. I would like to congratulate the entire Aspen team on the successful launch of the business back onto the New York Stock Exchange.
Welcome back to NYSE Live, everyone. The crypto industry is front and center this morning. A very exciting morning at that, of course, as the folks from Circle list here at the NYSE, ticker symbol CRCL. Joining me now for a bit of a deeper dive into the space of the crypto landscape is Andy Berry's head of product and research at CoinDesk Indices. Andy, it is great to have you here. Good morning.
What a landmark day for blockchain, right? I remember the first time I walked on this floor in the late 90s, and the specialist booths were wooden, and there were paper tickets, and who'd have thought that a blockchain-based stablecoin company would be IPOing here today? So it's really momentous. I'm getting a little emotional about it. It's fantastic to see, and it's just, the first of many, great things to come.
Yeah, I mean, I think those of us that are in the space, we have a sense about the importance, the context behind this company being the sole issuer of USDC. But for anyone watching and maybe has only more of a loose familiarity with the broader crypto space, give this moment a little bit more context and perspective, if you can.
Most people's first entree into Bitcoin assets or crypto blockchain assets is Bitcoin. Bitcoin's important. It's a store of value. It's its own thing. Stablecoins present the opportunity for people to make dollar-based payments or other currency-based payments to store their on-chain assets in a safe place where they're not exposed to the same kind of volatility risk. And they're the center of DeFi. So it's an important business. There's $250 billion of stablecoin AUM right now. With the current legislation, the Genius Act going through Congress right now, that could expand 5 or 10-fold in the near future. So it's a major thing. People who think about investing in digital assets should understand that stablecoins have to settle to a blockchain, right? They trade on blockchains. So they're going to trade on Ethereum, or they're going to trade on Solana, or they're going to trade on Tron. So when people think, what's the use case of blockchains? Stablecoin is a huge use. So as they grow, blockchain use is going to grow along with it.
And I'm glad you mentioned the so-called Genius Act, because we know that members of Congress, they love their acronyms, and that is certainly one of them. How important is it to have a more willing federal government or regulators that overall, and we have a conversation a lot about the institutional investors warming up to this space, but we're really seeing a different approach from government and regulators as well. How crucial is that to supporting these core products?
Let's think of all the beneficiaries, right, of the Genius Act and the momentum behind it. First of all, brings public blockchain use into a much broader, more public perspective. Second of all of these stablecoins are backed mostly by treasuries. So this is the new giant new customer, right, for the US Treasury. So we can help diversify the people who are, or the entities that are holding on to treasuries long term. How important is that? I think a lot of the impetus of the government is to find more places that really need to hold treasuries long term. For people, for payments, for people who want to store more of their assets or their wealth on chain, stablecoins are critically important. Wallets are proliferating. Other ways to access for new users are proliferating. Many people years from now won't even really think about whether I'm using a stablecoin or a fiat currency to make a payment or to make a trade. And this, is a really important day, and the Genius Act is a really important piece of legislation to advance that a giant step.
Yeah, this is a company that has made the lion's share of its revenue through interest income, but I wonder with a path to the future, it's a company that's been very open about trying to open up the pathways moving forward. How do you kind of see the evolution as these technologies continue to come about and how they benefit a company like Circle?
I've never seen a segment so more willing to share its profits than this kind of, they are not allowed to pay interest on stablecoins, yet the backing or the assets that back the stablecoins are in yield-bearing assets. So you have this tremendous kind of difference, right? And that is true for all stablecoins right now. That has to evolve. That has to evolve in a way that's good for users, that has regulatory supervision and sort of containment, and that works. You don't need to replace banks in the payment network, but you do need to find a new way for all this to work so that the value flows are complete. So haven't quite figured out that yet. There's a lot of ideas on the table, but in the meantime, growth for payments, growth for on-chain storage of risk-free assets. All this is great. We'll make the rest of the progress over time.
Yeah, of course, not to mention the tokenization of other real-world assets, all part of the conversation. I could do this with you much longer. Unfortunately, I have to leave it there. Andy Bayer, CoinDesk, great to have you here.
Thanks so much for having me.
Thanks for joining us. What a historic day. This is an awesome one down here.
Fantastic. I mean, seriously, I'm getting sentimental.
Feel it. You feel, look at all these people down here. It's what it's all about. Andy, thanks a lot for joining us.
Thank you.
All right, folks, stay with us. A lot more NYSE TV coming up after this. Stay tuned. Oh, we're still live. Okay, there we go. In other news, there we go. Pardon me. The New York Stock Exchange turned 233 years old in May. The trading floor that I'm standing on right here has seen a lot of changes, to say the least, since taking residence up in 1865. One object has served the community for most of that time. NYSE curator Anna Mello has that story.
A distinctive sound can elicit strong memories that last for hours or even a lifetime. Those following finance with their ear to the ground will readily recognize the sound of a tolling bell and a gavel strike as representing the close of global capital markets, a soundscape unique to the New York Stock Exchange. The New York Stock Exchange has been striking a gavel at the close of trading since 1817, first to signify the end of trading one single security, and today signifying the end of the entire trading day. Countless gavels have struck this exact same sounding block since 1890, which is before women had the vote, before the first manned flight, and even before sliced bread. This sounding block has witnessed countless stories, and here are just a few. The sounding block began its career during the Second Industrial Revolution. Steam power fueled progress. Railroads and canals connected the country, and Edison's light bulb filled America with a warm electric glow. Originally from its perch upon the bell podium, the sounding block oversaw a seething mass of humanity in swallowtail coats and stovepipe hats, belting out the cacophonous din of open outcry trading. As the steam age raced ahead, heavy industries like railroads raced to list their securities, brokers raced to meet demand, and the New York Stock Exchange's first permanent home raced towards obsolescence. To make way for both broker and technology, the New York Stock Exchange's first permanent home was demolished in 1901 in order to make room for its current home. As brokers shed their Victorian garb in favor of double-breasted sports coats and bowler hats, the New York Stock Exchange christened its new home on April 22nd of 1903. The sounding block was placed upon the freshly hewn marble of the bell podium, where it has remained ever since. A decade later, World War I sent global financial markets spiraling into a panic. All foreign markets had closed as of July 30th of 1914, and the New York Stock Exchange quickly followed suit, closing the next day and beginning our longest ever closure. When America entered World War II 23 years later, the sounding block witnessed an even greater seismic shift. With nearly 1,000 members of the trading floor community off fighting for democracy, trading floor jobs were filled by women for the first time, starting in 1943. Those soldiers lucky enough to return came back to an America well equipped for growth, as increasing consumer demand, surging product development, and ample disposable income generated an economic boom and a bull market that lasted for 8 years. 2 decades later, the sounding block had a box seat view to the upheaval of the 1960s. As men shed their wool suits in favor of synthetic fabrics, the New York Stock Exchange shed its status as an all-boys club. Active in the securities industry since 1954, Muriel Siebert was attracted by the egalitarian nature of the trading floor, where a broker's compensation was determined by ability and not by gender. On December 28th of 1967, Siebert was admitted as the first woman to own a seat on the New York Stock Exchange. 3 years later, another barrier fell when Joseph Searles II became the exchange's first black member. Even before joining the New York Stock Exchange on February 12th of 1970, Searles had enjoyed an impressive career, playing professional football for the New York Giants, as well as acting as an aide to New York City Mayor John Lindsay. At the dawn of the information age, stock trading had remained mostly unchanged since the sounding block began its career in the 1890s. Each auction was held verbally, and to an outside observer, the floor appeared completely unaltered between 1929 and 1979. But in 1979, the view changed dramatically, with the installation of over 15,000 pounds of computer equipment, all supported by a massive superstructure at the top of the trading floor. The personnel working beneath continued to change their look with the times, swapping out their patterned polyester suits as the CRTs around them changed to flat screens. Today, the New York Stock Exchange runs the last stock trading floor, utilizing a hybrid trading model unique among its peers, utilizing electronic trading technology in tandem with the human element. And with an active trading floor, the sounding block remains in use and is struck at the end of every trading day. Without a pen, a sheet of paper would remain blank. Without nails, a house would fall to the ground. And without a sounding block, the strike of a gavel would be inaudible. This humble object has been struck at every closing ceremony for over 100 years, loyally serving one single purpose: to shepherd the global capital markets, the New York Stock Exchange.
And a special thanks to the NYSE's very own Anna Mello for that outstanding look at a crucial piece of history here at the New York Stock Exchange. And that's going to do it for this morning's broadcast, a very big one, in fact, all around Circle's IPO. We will be back tomorrow morning with a whole new broadcast at 9 a.m. Eastern, right here from the trading floor of the iconic New York Stock Exchange. Thank you very much for taking the time to watch today's show, and we will see you again tomorrow.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.